and we are in a Wednesday tutorial session held every other Wednesday for the benefit and edification of people who have taken the Hidden Pivot course, or at least audited the recorded version of it and are kind of wading into things. This is the best way. If you're wading in up to your knees, this will get you in up to your armpits in a hurry. So I always or usually start these sessions just trying to give you the benefit of what I'm actually doing in my real trading life. And those of you who have been coming over the last month or two know that I have been working on a partnership with a company called TradeExchange.com, and probably within the next 3 or 4 weeks, if not sooner, I'm going to hold a webinar for Rick's Pick subscribers on the features of this service. But just to simplify, if you sign up, you go to tradeexchange.com, and that's something you guys can do right now, and just kind of look it over. I am one of, well, it was maybe 30 or so developers. I don't know if they've recruited more developers, but that's what they call me. I'm a guru trader / developer. You can sign up for as many developers as you want, and each one that you sign up for, whenever that developer puts out a trade, you're going to get an alert on your phone that says, Long John Silver is about to enter to do a trade. Are you in? And if you click the in button on your phone screen, the trade will be executed. It will be in your brokerage account, but the actual back-end execution is going to be done by one of the affiliate brokers, such as Thinkorswim, Schwab, all the biggies. So these guys are an interesting bunch. I think there's one literally rocket scientist with a PhD from Stanford, and one of the guys comes from a compliance background. But I think they've got a great idea here, and they've been shaping it over the last 3-4 months. And I was one of the very first developers to sign on with them. It just looks like it can't miss. And I think it's going to solve the Robinhood problem. The Robinhood problem being all these relative novice traders who are up against the most common experience for new traders, which is that they mostly lose money. And that's going to be true for 98% of the Robinhood traders. They're going to lose money, and eventually it's going to peter out as a phenomenon, but it's going to take a long time. It took stock options a long time to peter out when people discovered that retail traders don't really have a prayer of making money with puts and calls. So Robinhood, it has a pretty long, it's got a long lifespan here, even if it's not going to produce income for the people who sign up. All right, so Trade Exchange solves that problem. It lets you do trades that I guess experts are doing more or less for you. And there's every reason for you to sign up for certainly Rick's Picks. I know most of the subscribers would love to have that feature. I hear from a lot of subscribers that they're just too busy to pay attention to stuff that goes on in the chat room. And even then, they don't get it. They're not really in the swing of things as far as hidden pivot jargon and so on and so forth. So I know that a lot of guys would like to jump on something that allows them to just get into trades that I and my two partners are doing each day. So we're going to offer tentatively, and initially we're going to offer a few different types of trades. Rick's Picks Bold, which will be bigger stocks, bigger swings, bigger money, perhaps longer hold times. There'll be Rick's Picks Light, cheapy stocks, usually maybe $15 or less. And then there's Rick's Picks stocks and ETFs, which are more standard issue stocks in a medium price range. As you know, I don't care what these companies do or what the news is or anything like that. They're just dots that go up and down. And all right, let me show you some of the dots today that I and my partners have been looking at. First, one of them sent out this little prospectus with about 10 trades. And I'll just quickly review these. We're limited in this venture to mechanical trades only. We cannot use the buy stop entries that you guys are familiar with from when we were looking at futures trades that would satisfy the requirements of Striker. We're still going to do a deal with Striker somewhere down the road, but this one with Trade Exchange looks easier, more promising. But as I'm mentioning, the platform we're using, we're putting out a trade to a lot of people, and if they're all going to get into this trade, if we say, buy Ford if it drops to 750, we want to be sure we're trading good liquid stocks, and maybe however many people, it could be 50, 100, 200, 300 people can get in. So typically we'll be looking for stocks that trade 2 million shares or more a day, and all the entries, there are no short trades yet, they don't offer that, but all the entries are going to be with limit bids. So the fills will be pretty clear. If it trades below the bid, it means everybody will have been filled at the limit price. All right, so just to sort of quickly go over some of the things that in this group of 10, I saw a couple trades that I kind of liked, and that's what we're doing. We're sort of having a conference each morning, and I guess you could say not quite trading by committee. I go over the trades, explicate them as I'm going to do now, and each of my two partners, they can decide for themselves whether they want to jump in or not. Again, all mechanical trades. Here, I didn't like this one for a few reasons. Number one, it doesn't start. It's a decent impulse leg, but it's not exactly the strong straightaway power impulse leg that we look for because of this lengthy consolidation here. So it's not a good straight shot impulse leg. Although it is impulsive, your high there did get past an external peak right there. We've got a little too much CDing going on from, well, BCing. We've got a very lengthy BC. And I want to just take this example as an opportunity to remind you of why these I just want to check to make sure that you guys are here and not saying, hey, Rick, we're looking at the wrong screen or the sounds. Let's see here. I could have saved myself some. All right, I don't see anything. All right, so everything's okay. All right, so I want to remind you that these impulse legs, these mechanical trades work because when you start with this strong impulse leg, everybody's pretty bullish and everybody's thinking the same way. They want it to take a rest, take a breather, pull back a little bit, and then when it starts up again, they're all going to jump on it. So that second leg, if you've had that good strong first leg, AB impulse leg, the second leg is going to attract more than its fair share of bulls. Everybody's going to get too bullish too quickly, and ideally, the CD leg will get up above P, above the midpoint pivot, somewhere between P and P2, midway is ideal, and it'll pull back to the green line, and that's where we buy it. And so again, the strong impulse leg makes everybody too bullish. They all wait for the pullback, and as soon as it shows signs of embarking on the CD follow-through leg, they jump on it too aggressively, and it comes down hard to punish them. So it's when it gets pulled back all the way to the green line, you can understand that a lot of them have been really punished pretty badly at that point. That's exactly where we're getting in. So that's why the trade works. But when you have an elongated BC stretch, like from here B to C, that somewhat diminishes the usefulness of that powerful AB leg that turns everyone bullish. Because by definition, if you've got this elongated BC, a lot of bulls and bears are, some are getting in, some are getting out, and it just kind of mitigates that strong impulse leg effect. So all of this zigzagging here sort of normalizes the supply and demand. Our mechanical trade really takes advantage of a temporary and egregious imbalance in supply and demand, but here bulls and bears are getting a chance to sort things out slowly over time. So it's no longer the really good opportunity, but um, sometimes even at that, you can see the impulse leg is strong. It's got a bullish trend, so eventually it'll get to that good enough for government work target, the D target. So you might be able to use it anyway. You're still going to be bullish, but you can see that it did some stopping out um, here before it finally the pattern resumed. This one I didn't like simply because um, it's not a true impulse leg because this AB didn't get past any external peaks. However, with these mechanical trades, I continue to emphasize that you only need good enough for government work setups to make them happen. So here, even though we don't have this perfectly legitimate textbook AB impulse leg, it's a strong rally, and yeah, it's going to pull back and give you another leg up. So we'll count it as an AB leg, and in this case, um, I kind of like. It's not a bad setup. Even though I would, we have this impulse leg getting past that external, so it sort of refreshes the whole rally here from the March 23rd low. And if it were to get down to the green line, um, I think I'd be tempted to buy it. You're really betting. I don't know that we're going to get to the D target up there, but I think the green line, it's more likely to give us a one level rally, green line to red, than it is, I think, to dip below that point C low. But I'm not going to be so ambitious as to shoot for the D target of A, B, C, D. I'm just going to buy the green line here and shoot for one or even a fraction of one level because, all right, enough said. Here, I like the impulse leg, but we do have that elongated BC. And let's face it, silver has been one little nasty son of a bitch. So in this very promising uptrend that began in mid-July, we've had a little too much time to correct it. And when we should have had it corrected and ready for another leg up, instead it gapped down and gave us another gap a few days later. So what that makes me think in silver is no matter how strong these rallies look, they're just trying to sucker us. This pattern, this is a great impulse leg. It's so promising, but you need to be objective about how this thing is actually absolutely crushed the promise of that impulse leg. Not only that, but if you're looking at another feature of this chart that is known to many technicians, you see you've got an island reversal. You have a gap here going up and a gap there coming down, and it strands a whole couple days worth of trading up there. That's an island, and we've reversed the bullishness of it with this gap down today. So we've had an island gap reversal, very bearish formation, and I just see silver trading this ETF vehicle for silver trading below 2042. This one, no matter what this thing does here, based on some stupid news, this must be some drug firm, but whatever stupid news drove this gap from yesterday, I'm not buying it. And even if I am, I don't want to buy it because this thing has gotten pasted so badly that this little rally here, it's going to suck in everybody. Everybody's saying, "Oh, the thing's finally coming alive." The last thing I want to do is bump heads with all the village idiots who think they can beat the crowd here. Everybody's bullish now, and I just don't want to play for that reason. This was my pick, and you guys can do this trade if you want. I'm going to put this out on Trade Exchange. I am actually doing real trades on Trade Exchange, but I'm not quite sure how much they're exposing those trades to the public. I don't know that they've attracted a lot of customers yet, but I expect everybody, every single subscriber at Rick's Picks will want to join, because one feature that I did not mention to you, I may have mentioned it in the past, but just to reiterate, it doesn't cost you anything. It's not on a monthly subscription basis. In other words, you can sign up for me and 5 other developers, and they'll give you voluminous analytics to tell you how each of us is doing. So you'll have plenty of information there to decide whether it suits your appetite or not, whether it suits your taste. So, but there's no charge. Pay $500 a month to subscribe to me, or $300 a month to subscribe to someone with perhaps not as good a track record. You only get charged for winning trades. So, and you get charged $30 if the trade makes money. So that's it. So there's no reason for you not to sign up. It doesn't cost you anything if you don't do anything. And again, if you to make a trade that doesn't win, doesn't make you money, you don't get charged for it. So it's a pretty good business model. And so this is a trade we're looking at in a little stock, a little $3 stock called NNDM. And you can see we've got a good strong impulse leg. It got past a couple of externals, and it's getting a little bit ahead of itself here, but the move is up into the sweet spot about midway between P, the red line there, and P2, the pink line or purple line, whatever color it is. All right, so on a pullback to 258, I'm a buyer with the stop loss just below point C, $2.11. This, I really wanted to make it very clear today when I discussed these trades with my partner, we're just not going for lunatic stocks. All right, and I don't care how ABCD like or promising a pattern looks when a stock gaps from whatever $1.90 up to $4 in a day. There's nobody but nitwits, madmen, thieves. Not that we're not smarter than all of them put together, and we can discover trades. We can figure out ways to trade it, but why bother? If you want to trade this, I mean, I don't think of the gap as anything but just a flat a bar with no lows or highs along the way. But here I have to confess that it's given me kind of what I like. I've got a single bar one-off A there. I've got a single bar B that actually did take out an external low there. So here, even though my partner was looking to buy on a full pullback all the way to $2 a share, you can nibble here at $2.56. And I may put that trade out on tradeexchange.com with a very tight stop loss. All right, so I would bid at 258 with maybe a 252 stop loss, 257 bid or a 252 stop loss, because if this is going to work, it's going to work very precisely. So a nickel stop loss is probably all you're going to need there. Disney, I do have a certain bias. I despise Disney and everything they do, and the bean counters that have essentially taken Disney, which in generations past was a real creative force, and they've turned it into these horrible CGI animations and films. And I think Disney has sucked the creativity out of the movie business. So I really hate Disney, and I have a certain bias. But there's no, and it's almost like Boeing, really. It doesn't matter whether they're closing down all their theme parks because of orders from the various states in which those theme parks exist. Uh, all the sleazeballs who own this stock, they're all hanging together, and as much as there are good reasons to beat this stock down, nobody's going to the movie theaters to see Disney movies. Their sports TV franchise has really gotten hit, and the amusement park. So in a way, it looks kind of like Boeing, except that it hasn't killed anybody. I don't think the corporate disaster hasn't caused anybody's deaths. So, but because all these slime balls, the smart money has held at Disney for 100, since Walt was around. They just don't give up on it. They just hang together and say, all right, all right. So, but I digress. All right. So here, I don't believe the whole impulse leg, this very ambitious leg. At best, I would start with that impulse leg right there and trade a mechanical pattern using A, B, C. I'd want a perfect sweet spot high and a pullback to the green line. So Disney is actually tradable. But I'm not going to take the smaller pattern with that gap there because that's sort of getting down to the lunatic level to look at it. This one again, lunatic stock. I'm just not interested in it. A stock that goes from whatever 30 cents to $4 in a day is not something I want to get involved in. IBM, not bad. This isn't exactly what I call a good, strong, direct impulse leg, but it is. You get the general drift here. It's going up, and it probably and a little ambitious to say it's going to get to D, but I don't think that all of this and then the consolidation there is going to lead this thing to stop everyone out below point C. I think if you buy the green line, you're definitely going to get a play. It's going to take you a little higher, maybe not even to the red line, but I think if you get into the green line, it's going to trade above the green line before it trades below C. And that's not exactly the one-to-one risk-reward relationship that we are wanting with these mechanical trades, but I'm just making a statement there. All right, so that's the trades that one of my partners put forth. The other has been sort of busy in his day job, but he had promoted this stock to us as a recommendation of John Duty, who thinks apparently that it's going to $5 a share. You and I can see $1 a share pretty easily here, but this is Bellow Sun Mining Corp. So I don't know what John Duty's story on that is, but I just mention it because my partner did. Maybe some of you are interested in these gold stocks. All right, some of the trades that I'm looking at, I'm actually in this one, and you can see it's a pretty straightforward. Let's see. Well, we've got a good strong impulse leg, and I'm trying to remember how I determined to get in. I'm in around 1106 or something. I don't like the way it opened on at the high of the day and sold off. It told me that the scumballs who work this stock for a living um, are really just trying to get out of it here. But it was so blatant that I thought I'll stick with it anyway. But I almost came out of it. I almost put out a change order this morning that said sell. And when I do that, when I cancel, when I sell at the market and get out of it, I have to give a reason. You guys will see that when you download the tradeexchange.com application on your phones, which you should do now. Uh, it'll say canceled because in this case, I'm just bored to death. I got in over here and I just don't like 4 days of garbage here. So, but I'll stick with it anyway. I meant to put a stop loss below today's low because I can see this thing falling apart if it goes below there. I just hope I can remember to do that. All right, and some other stocks I'm looking at. You'll see now. You should recognize instantly why I'm doing them. a good strong impulse leg. When we get above the pink line, if we get up here, we're almost thinking, well, the target is fulfilled and we shouldn't buy any pullbacks. But in theory, the target is still valid until it's reached. So even if it gets up to here and pulls all the way back to here, the D target is valid. But as a practical matter, no. If it's missed by just a little bit, we don't buy a pullback all the way to the green line. But if it's missed by, in this case, we didn't quite get to the halfway point. I would say the halfway point, if it gets above that, I no longer look for the mechanical trade using this big pattern in its target. So here, but the question is, do we want to buy P or X? And in this case, just eyeballing it, forget about any rules that I might have given you in the past or things that you think about the hidden pivot method. Just use your eyeballs and your common sense. If this thing falls, it's kind of hard to see it falling all the way to the green line. But if it goes to the red line, if we're bidding there, it's not so hard to see it's falling down to here, which is about where the stop loss would be. I'm eyeballing that because the stop loss will be as far beneath this red line. It will be equal to a third of the difference between this line and the D target. So it's always, you can tell it's about, maybe 70% of the way down. And I know there's an exact fraction there that represents arithmetically. All right, I'm gonna get let me get out of there. All right, so I think I haven't decided yet, but I think I'll probably be a buyer at P with the stop loss down here. But ultimately, I want to cut the risk down a little bit, so I'll do the trade as an RABC. I'll go A, B, C, and get in when I'm triggered off that. And as I mentioned earlier, I can't put out buy stop limit entry orders on tradeexchange.com. So what I would need to do would be to do the trade in the reverse ABC way, A, B, C there, trigger in like right here, 25% of AB added to point C gives you your trigger. I might even use a bigger trigger. This looks too big, so I might use an artificial trigger like, well, here to there. That ignores that whole spike right there. But all I'm trying to do is get an AB that gives me, it's just, I'm comfortable with it. I want it, this one is too teeny tiny. We get down to here for point C, and all it's got to do is rally 25% of the difference between there to there. In other words, just a few ticks, and that will tend to generate more false entries than we want. So we want a bigger AB, I do in this case, and this one is too big. So what would be between, halfway between them? It would be here to here. Visually, that's not a true AB. We can't really go from there to there, call that A, B, C with this guy in the middle, but I'm doing it anyway, simply to have an AB interval, an AB with a length that suits my subjective ideas about it. So I know I've mentioned this point that I'm making before, but I just want to mention it again because it's somewhat mechanical trade itself is a really simple idea, and I want to keep it simple, but one place where we get off the simplicity track just a little bit into something that's conceptual is this idea of how big is the AB, because the size of your AB is really going to be a very crucial factor in how profitable your trades are. But I don't want you to think that there's any scientific way of arriving at the AB. The AB is just sort of, it should be constructed artificially, mechanically, arbitrarily to suit your subjective ideas, which is not to say that much or maybe even most of the time, the AB that you settle on will be a visually proper ABC. It'll be what it looks to be. We've got a nice low, A, B, C down there. If we're back in time to here and it starts to fall down here, this AB is such a natural that you probably use it. But you can cut it down to size and take the gap. Take your A is that low right there. A, B, C. So we get to make the point yet again. The A, B is pretty arbitrary. You can sort of pick and choose them. All right. This, you can see we've got a really good, strong impulse leg. And I wish I could, there we go. Good, strong impulse leg. I could use a better, more, this is a more substantial, pardon me, substantial A. But I'll take this because with these mechanical trades, it only has to be good enough for government work. So we've got an A, B, C that gives us some levels here, and I'll use those good enough for government levels to fashion a trade. But first I've got my alert line set right up here at P, because I have no interest in this until it gets at least to P so it can pull back to the green line. But again, it's based on the good, strong, steady impulse leg. It's not a steep, super powerful impulse leg, but it gives you a sense that this thing just wants to go higher, meaning it's going to reach its D target eventually. And same thing here. I've got an okay impulse leg with a one-off single bar A. I wanted to get up here to pull back to the green line and give me a trade. And this one, good impulse leg here. You can see it's pretty steep, especially the end of it. The B high there did get past the external peak, so it's a good, strong, legitimate impulse leg. We've had a little bit of a difficult BC right here. It stopped out longs there. It stopped them out again there and again there. All right, but you need to see that for what it is. It stopped everyone out because the overall pattern is so bullish. And for me to merely say that it's so bullish is as much as saying that as soon as it shakes out all the bulls, it's going to give us a nice CD leg. So now the CD leg is moving, and and I'm hoping, you guys can see it right here. There's no way that this thing is not going to, it didn't gap through P, so there's no guarantee of 27, but you can see that's where it really wants to go, and it'll get close to that D even if it doesn't get there eventually. So what that means is that if it pulls back to the green line, absolute buy. There's simply too much strength in this thing at this point, with this CD leg well underway. There's too many bulls in the sense that, yeah, it'll pull back to green to get rid of them all, to shake them all loose. But once it does that, the overall pattern is still attracting, I think, enough buying interest that it's just, even Mr. Market is not going to be able to pull it back, is not going to be able to stop everyone out below 1911. So this is a very nice pattern, and to me, the only problem with it is that it may not be so kind to us as to pull back to the green line to X. So if we miss the trade here, it's because it's just too strong. We don't get that pullback. We can still do trades. We can take smaller patterns and we can work the 5, 15, 30 minute to get in up here before it even pulls back, make a little money. So you guys know I'm just taking one particular trade with a limited repertoire of entry strategies. All right, it fits trade exchange, but and I've explained what the obvious mechanical trade is here, but you can see that it'll be very easy for us to get chumped out of a good trade here. But fortunately, as we know, there are just many ways to skin a cat here. We can get into this a lot of different ways. All right, so that's it. That's what I covered this morning with my partners. And if I can just remember this Angie here to to put a new to raise my stop loss. All right. So let's see what we can find in the way of, I don't know what the market's waiting for today. Oh, well, actually, I as much as said in my commentary that it is very sneakily distributing here. But all right, let's take a look at the daily in this E-mini, see if there's something for us to do, maybe even a trade to force. All right, so we can see that's no A at all. So I must have drawn this pattern from a, okay, so I mentioned in my commentary that E-mini, S&Ps, Apple, and NASDAQ 100 had not reached their D targets. But yes, it's a little premature to say. I added the words to the tout. It says they have yet to reach them. I wouldn't call this a failure, but I would say it's not exactly a rousing demonstration of strength when it's got this phenomenal takeoff here and it can't complete the move to the D target. And instead, we're into day 2 of a consolidation. All right, so yeah, I don't see it just another day of this, and it's hard to see it falling apart. But we're not seeing this thing is definitely saying, hey, I need a breather. So let's see if we can force a trade. Generally, we like to take our force trades on little charts based on things we see in the bigger charts that give us a handle on a possible trade. So here, there are no handles. I mean, we don't even have coming down for the last couple of days. There's no externals along the way. So we really have nothing in the way of an A, B, C, D pattern we can depend on. If I'm going to force a trade, I want the setup itself to be a really good one. And this one sucks. All right, so let's see if we can maybe find something to do in Apple. Apple has given us a little something to work with here because yesterday's move, 2 days ago's move, did take out these externals. I'm going to count this as an external because it would be on the 30 or maybe the 15-minute chart. So, trade station, you stink. Sometimes when you don't want to grab the whole thing there, you'll be like inches away from it and it grabs it anyway. All right, so there's nothing on the 60 for forcing trades. Again, we always need impulse legs that pass external highs and lows to get there. So let's go on to 5 and see. All right, here we've got something to play with. We've got single bar A, kind of one off relative to that, gets past internal and external there. So that's the real deal. So let's see what we can do here. All right, here to poop to pop. The thing didn't even. I would have no problems with the mechanical trade if it had gotten up to here, then pulled back to the green line. As things stand, it couldn't even make it to the red line, much less to the sweet spot. So I don't really want to try a bullish trade here. But but there's no particular strength or weakness. All this thing is doing is taking a sleazy scumball opening here by our usual masters of the universe, where it created a big opening range, and it's gonna uh, essentially back and fill that range probably for the rest of the day. All right, so the one trade I don't like, but I did tell you I was forcing trades, is if it's going to be in this range today, there is not sufficient interest period to sell it down below this morning's low. then we should look for a move down into the void right here between this low and that low, down into here for a reversal. So that's the way I would set it up. I would set up A, B, C, just somewhere in the void, and we'll have to keep moving our point C. If it goes down, 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 we've got our A and B set, and we take the first C and plant it wherever. As soon as it starts getting below that low right there, we can start planting Cs. And if it goes lower, we plant a new C. If it goes lower, we adjust the C, lower, keep adjusting the C. And when it finally rallies 25% of our AB leg and triggers us in with the conventional green line X, which not completely conventional, because remember, we're in a reverse ABC mode right here. But when it does that, I'll do the trade. All right, so that's a force trade. It's not like top shelf first quality, but if I'm desperately looking for something, we could do worse. All right, so yeah, so it's going to break down below that low, and from that point forward, just to jerk everyone's chain, we'll have some sort of rally. The interest is not there to take it all the way down here. So by definition, we have to have a bullish reversal from somewhere in this range here. Let's take a look at another lunatic burrito nation stock, Chipotle, and see what we can do. And we're going to use that idea of the mechanical trade that we can get down on the 1 minute chart and do these trades with limit bids and offers. That's one of the most useful aspects of mechanical trades. We're using limit bids, and if we're doing mechanical trades on the 1 minute chart, we can find patterns so small in Chipotle that we can trade a $1,300 stock with risk really tightly controlled. We can probably do trade risking no more than $10 to $15 per 100 shares, which ain't bad for a $1,300 stock. All right, so let's see what we can do here. All right, what we're looking at is a little bit too obvious, and everybody in the world is bullish. Well, we didn't quite get a chance to short this little pup at 1343.97. There, you're stuck. It's not a mechanical trade strictly speaking. It's simply an old style. When you got a pattern you like, just short P with the tight stop loss. So we could have done that. You can see we didn't get a trade off. All right. So let's come down a little more to see what this thing will give us. All right, a little more. All right, so here we're really in. So again, we're looking for mechanical trades simply because we are dealing with a $1,300 stock where we only can and want to use limit bids. All right, so you already know that if this thing had gone just another tick higher, it looks like the droolers, the algo writers are all out there today, and they didn't get the thing that makes them salivate, which is a move with this high. We didn't get above that high. So I want, as I said, when we're forcing trades, I want it to at least be a decent setup. Here, we don't even have a real impulse leg because it didn't get past this 1335 high. The actual high was 1334.93. But just to complete the thought, if we'd had this high be even a penny higher than that and pulled back and then another move up, I would do the mechanical trade on a pullback. A, B, C, rally into the sweet spot between P and P2, pull back to the green line. That's one place where you're forcing a trade. Your stop loss in theory is 25% of your your AB, let's see, AB leg. So the leg is 1328 to 1335, 7 points. So we're all right. So we're risking. Well, actually, that's more than I told you, wasn't it? It's we're risking $600 on 4 round lots here to do this little pattern. Um, we're risking 25% of our AB leg. So that's actually that winds up being a pretty big AB leg compared to what we really want to be trading in this stock. Let's see if we had anything to do down here on a chart of even lesser degree. I'm going to come down to the 15-second chart and let's see. The 25 tick chart. All right, so it gets pretty hairy here. Um, well, why? Actually, this is, I don't know why it's giving us such nice bars. This looks almost like a 15-minute or 10-minute chart. Well, I'm going to give up on Chipotle. I tried. Let me get back to something reasonable here. Let's see if there's anything to do on our beloved gold. And I'm in one of those wouldn't trust gold as far as I could heave a vault right now. I just don't like it. And we already looked at that silver ETF SLV where I've given you my thoughts on it. And it's just so nutty what this thing does to torment. You can see that low there is 1/zillionth of an angstrom lower than that low right there. So it's just a lot of traders. There's just so much navel gazing going on right here. It's just a lot of everybody's trying to outdo each other, and they're all looking at the same benchmarks. So good place for a trend failure here because there's no slack in that wall right there. It's just there are no benchmarks. There's nothing that you can use as a point of reference here. So this is a good place for the rally to fail. If we were just sort of doing it that way, we're looking for a failure somewhere in the void, maybe closer to here when we get really into the void. This would have been a logical reverse A, B. The first C I would have used would be I want to get up a little higher into the void, maybe here. So let's plant it and see whether we got false triggers there. It looks like we did. And I'm going to have to beat TradeStation into bloody submission here to get it to give me the correct A and B that I've attempted. Let's see if I can get what I want here. There's our B. There's our A. All right, so well, I'm not really interested. I wanted to get really the void is here, and I wanted to get well into the void. So I really wouldn't have started with that low. I would have started up here. And this it looks like it mistriggers in by a single tick. Let's see if that's correct. Yeah, this is you can see the trigger there for getting short. A, B, C get short on pullback. It missed by a tick there. Rallied again. This time it triggered us in. We did not get to P where we could take the position off, but because damn this thing. Piece of crap. Let me try it again. All right, so it didn't get us in, but second time's the charm. So we just pick ourselves up because it's as much, just a little more into the void up here than it was there. All right. We don't use second time's the charm when we're focused precisely on a P or a D, and then it just moves a little bit above it. We're looking more for P's and D's that have a greater generality to them. So here we take the trade, we make some money. All right, we make $1,200 on 4 lots there. We cover all 4, but we cover half of them with the stop loss up there. We maybe you if you were brave and bold, you'd still be short down here with a pretty nice profit. So I know this isn't very impressive since it's all hindsight, but I wanted you to get a sense of how this isn't even a force trade. It's one that's actually kind of likable, and you're risking more. You know, you're taking a pretty good a premium length AB there, but you kind of need it. You just don't want to get false triggers like A, B right there off a really short. Um, I mean, a short interval X here of a real short AB down here. So I think we need it because we're into this great big void here that's going to give us a top. We want to make sure that it's really fallen significantly enough to trigger that we know the bulls have been broken or the bullishness mood has been broken. So this is why we give it such a big space. But again, your risk there, your entry risk is 1-to-1. So you're risking $1,200 to get into this trade. Let me just check. All right. Just seeing if you guys had any questions, but if you do, hold them until after the session. All right, so we can do this again. We've got, once it breaks below that low right there, it's into this void. The next structural support it picks up is, well, we'll call it this lower low right there. So let's do the same thing. And I don't think we'll get to see this trade play out before the session ends, but I just want you to know what's on my mind here. And this trade is going to work. It just will. All right. So if it breaks down, if it breaks below that low and goes into the huge ocean between that low and the next structural support down here, we want to trade it. We don't want any false triggers or a teeny tiny AB. Like if we did A, B, C, then all we need is a move 25% of that AB leg to trigger us in, stopped out, trigger us in, stopped out. So we need a more generous AB, A, B, to make sure that when we start to rally, it'll trigger us in. But it's not going to rally so much that everybody's going to get the bullish idea. By the time we get down to here, the worries are all to the downside. Everybody's thinking, "Oh God, this thing's broken." So you can have a fairly substantial rally before people say, "Well, maybe the downtrend's over." So that is a very subtle point that I just made, but it's fundamental to your understanding of how we tailor these AB, these AB components when we're setting up. All right, so it broke down now. When we're setting up reverse ABC trades, I'll repeat it again. It's arbitrary and mechanical to determine. In this case, the visual is so compelling. The visual AB, the what I call the natural AB, is so compelling that we can use it. And I would say, yeah, I'm missing a lot of trades where it does not fall down into the great void, the ocean there. It simply does the minimal piece of work of stopping all bulls out beneath that low right there that everybody has been focused on. I can tell you now it's going to break down again because, and you guys should, well, maybe not. You guys, all right, so interesting. All right. So you can understand that as soon as this thing goes, every bull on earth, all the droolers, the idiots, the village idiots, the imbeciles, they're all watching that low and counting, and they've all got stop losses just below it, or at least, the stupidest traders. So you can be certain that if it breaks below that, a lot of bulls have been stopped out, and that means that any reaction move, any move higher, is going to be lightened up. It's going to be unburdened of all those bulls who would ordinarily still be on board and be profit taking. Some of them are saying, geez, that was a close call with death. If just give me a little bit of a rally and I'll get out. But all right, so anyway, the move here where it triggers just a tick below there, so many bulls have been spooked out that your initial move should be pretty strong. There are no bulls on board and nobody's expecting the quick turn. So if you don't get a good pop, at least to the green line, it's going even lower. There have been so many bulls spooked out right here that if it starts to turn at all, it should make it at least to the green line. If it doesn't, more of them have to be stopped out. But let's stick with our original. All right, lower point C there. Let me bring it down. All right, so we'll stick with the original. I don't know why. We'll stick with the original pattern. I think you need a new bar before I can. So this is this is a 5-minute chart. All right, so we'll stick with this, and you guys can. We're a few minutes before the tail end of the session. I don't know if we're going to get to see this play out, but I like the trade more and more if it screws around for a minute or two and gets people thinking maybe there's a bottom, stops them out again, and tries a little rally. The more the more instances where you have bulls getting stopped out as it goes lower and lower and lower, the more I'm liking this reverse ABC pattern I've used to give me a profitable green line trigger. If it gives it to me now, if it just starts inching its way up, and I like it. I like the green line to get tagged in either of two ways. I like a really tortuous move up, and then it touches the green line. Remember, nobody's bullish when it hits it but us. We're the only ones seeing a bullish trigger right there. Everyone else simply sees an upward correction and a nasty downtrend. So that is, you recall, that's really the basis for the counterintuitive trade. And there's a lot of counterintuitive thinking behind these RABC trades. All right, so let me come down. I don't want to wait 5 minutes to the next bar, so we'll set it up this way. And we didn't lose anything. We still have a clear. The pattern has the same clarity on the 2-minute as it did on the. All right, so let's take it down to the 1. All right, and I'll take the trade here if it gives me the trigger. And you can almost feel the psychology, the fear and greed factor as this thing moves up. You can sort of give it your own instinctual read. Like if it starts moving up to the green line, if it sneaks up on it and finally touches it, I think we've got a better trade than if it just sort of pops. And I'm saying that's sheer. There's no science behind that really. It just comes from a feeling you get when you're using a disciplined way of observing the price action. You're seeing it relative to your own instincts about where, not instincts, but you're seeing it relative to your own discipline benchmarks for getting in. And merely having that as a frame of reference heightens your instinctual, um, your ability to instinctually know what's going on here. And obviously, when you get too deep into that, when you start to overthink what's going on, you're going to be this thing's bitch because um, we'll do the trade again. We've got a lower point C. We didn't have any trigger there. You tell me if it popped really quickly to the green line right here, is the element of surprise sufficient that we should expect it to keep on going? It's going to get hard if it hits it and you're in, and it gets up to there. You'll be wanting to take profits because and you'll find that a lot of times you're justified in not holding out for P. But if your low is off some discernible P or D from a bigger pattern, you want to shoot not only for the red line, but maybe even for full D there or more. D meaning D of the reverse A, B, C pattern. But one other thing I'm going to tell you, and I call this a Dave trade. Dave Isham, DJI in chat room, uses this trade a lot. He uses reverse ABC patterns. This is another way to do the trade. All right, we're in. All right, so, but you can do it this way. You can get a reverse move into this sweet spot and a pullback to green and do it that way. And there, your stop loss is only, well, it's a point and a half. So it's $600 on 400 shares. And all right, we're in for better or worse, and you guys can follow this and see what it does. But it didn't give us that quick, scary, like holy smoke, surprise pop. So it's going to be a little bit of torture here. And if you understand that, then you realize that you're in. You've got to stick with this. You can't get spooked out if it comes down to 1906.10. You simply have to follow your discipline here. There's no way out. You got to do what you've instructed yourself to do because this thing's going to do everything it can to shake you loose. All right, we are more than over we're a couple minutes past our 1 hour time there, but it is, as you know, time for a little Q&A. So I would encourage you to ask any questions that you've got. Because if we were to do this, if you were to ask me those questions one-on-one, I'd have to charge you what some local civil contracts lawyer would charge you. I'm not up to $1,000 an hour like some of our guys who are paid to ferret out the obscurities in the tax code, and in whatever edicts the regulators promulgate that determine whether we get fined for trading. All right, no questions. That's it for today. I think we've had a good session. You saw sort of two separate lessons here. One was mechanical trades. Nice. All right, do we pick ourselves up and do it again? I think, yeah, we'll do it again. Here, we're just shooting for break even if it makes money. All right, John, fascinating study of GZ. All right, well, that's it for today. And I guess I will see you on, let's see, today is the 14th, so I'll see you on the 28th of October. We'll all be in a festive mood, pre-Halloween, I'm sure. And until then, happy trading.